For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Traders, Stacey Burke from Stacey Burke Trading. A short video today, a combination of mindset reset and a technical video, just reinforcing the concepts of simplicity and answering a couple questions from the community. We'll be looking at some examples of day 3 breakout traders in the markets, first red day, first green day, and an inside day, opportunities that presented this week, and keeping things really simple. I'll address a couple of comments in the community section. People are confusing things. They think it's about predicting or having some kind of bias. And again, I'm going to reinforce hunting setups as this comment. It's all very simple in hindsight, but we're going to demonstrate today how it's actually the trader's process, the daily process, that will help them identify simple, easy, repeatable, scalable opportunities on any instrument. Stacey, I don't know if it's just me, but I feel like you should redo your course and make it not just simple like you always said, but understandable. Well, hopefully today's video will again just reinforce simplicity. Now, here's the thing. There's nothing being hidden. I'm not keeping any key information from you. It's very, very simple if you make it simple. And that's the whole idea. Simple, repeatable, scalable setups. There's nothing being kept from you. Everything is in front of you. There's nothing that I'm not telling you. We'll take a look at an excellent question from Lue in the community regarding comparing the Japanese yen and the US Swiss franc, 3 days of breaking higher. We're going to break that down and just, again, step back, looking at the higher time frame templates. Now, new month, new timing cycle. We have markets that, again, will break out. They'll be inside of ranges. And I want to repeat the fact that if you're hunting setups, I'm scanning through instruments, looking for markets in breakout, looking for first red days, first green days. But we have markets when they start a new month, we have monthly highs, weekly lows, monthly highs, monthly lows. And the day one starts the new month. We have a market that on the very first trading day of the month will blow this up, establishes the new high and low of a month. Now, if we're hunting setups, we're looking for markets to either break out, to break out, coil, to break a level, a weekly level. We have an inside day on our Japanese yen. And as the new week starts, we have a first green day. Now that market continues to break out higher, day 1, day 2, day 3 into Wednesday, giving us 3 days of breakout traders to new monthly highs. How does price behave on the day? When we come to our Asian session on Thursday, we have a market that has now set up for the pump and dump template, a session opportunity on the backside of the week. Now, basic model for trade entry criteria, page 29 in the playbook, we have a market that has now broken the high of month level, and we're trading back underneath of our basic entry criteria heading into the Asian session, a pump and dump template after 3 days of breakout traders in the markets. Now, when Thursday closed, we had a first red day signal. First red day signal that broke the low of day level. First red day signal. But I want to back this chart up also and just, again, identify the importance of the higher time frame levels. We've broken out of monthly highs. We've started a new month, and we've 1, 2, 3 to the high in the new month, and then had a first red day signal with a lower low. Lower low, higher highs, only when daily levels are broken, not inside of little bars and pushes and gaps and sweeps. We're identifying the higher time frame opportunity and reinforcing that everything is right in front of you. There's nothing being hidden. There's no secret. it's about identifying the setups that you're hunting. So if you're hunting a first red day, we had first red day trader opportunities heading into non-farm payrolls Friday. So heading into Friday, we have our high of month level. We have a non-farm payrolls Friday. We have a first red day signal. A first red day signal. How does price behave on the day? Non-farm payrolls explodes through the high of the month before reversing at the high. And at the beginning of the 9 a.m. hour, the second hour, that market gives an engulfment. The market breaks down, and as our third hour begins, we have another opportunity to continue the low-hanging fruit to the low of the day, Tuesday level. Second opportunity, basic model for trade entry criteria, timings, levels, behavior of price. Coil underneath of our high of day level, high of month level, all the way down to Tuesday's low of day. First red day signal, a lower low, the pump on non-farm payrolls for the dump back down. And again, just projecting those levels across, we can see Tuesday's low of day became a level, significant level, after our first green day signal and 3 days of breakout traders, a first red day signal, Japanese yen. Now we look at the Swiss franc daily chart. We have a market that closed in breakout, similar to the Japanese yen on the close of the month, breaking higher day one, giving an inside day first red day signal on the front side of the week, closing the week out, and then first green day inside day signal on Tuesday on the front side of the new week, continuing into 2 days of breakout traders in the markets. We're trading higher, but we are coiling sideways underneath the high of month level. No signal day for a reversal, but we have a market now coiling sideways. You've heard me say, when a market is coiling sideways underneath of the high or on top of a low, it is preparing for a potential explosive move. We had a first red day. We had 3 days of breakout traders, first of all, in the Japanese yen. This is 2 days of breakout traders long without breaking the high of month level. We have no signal day. We had a signal day on the Japanese yen, the break of a daily level, a first red day and a lower low. We have no breaks of any low of day levels. We have higher highs heading into non-farm payrolls Friday. How does price behave on the day? We break out again and make a higher high on Friday. Prior to the non-farm payrolls release, an explosive vertical move in the long direction, making even higher highs, taking out the high of month level and coiling sideways into the close. These are not the same charts. We have no reversal setup on the Swiss franc. We had a first red day signal on the Japanese yen, a lower low, a break of a daily level, which is why I encourage traders, again, you're focusing on minutia, little pushes inside, higher highs and lower lows inside, and I repeat, there is no higher high or lower low unless a daily level is broken. Everything is in front of you on the chart. There is no secret algorithm. It's all right in front of you if you're patient and you are willing to hunt out setups and watching how price behaves on the day into the session that you're trading. We had several first red day opportunities on pound crosses and euro crosses. Again, market breaking out the first day of the month on the pound Canadian, pumping back up day 1, day 2, day 3 inside day, and a first red day signal heading into Wednesday, the midpoint range of the week, and breaking down through the new month, the new low of month established on the first day of the trading month. That market proceeded to take out the low of month level from December. British pound, day 1, day 2, day 3, first red day signal back to the high of the new month. A first red day signal on the British pound. Canadian dollar closing in breakout on the front side of the first week of trading month, and then also closing in breakout on the first day of this week. an inside day and a first green day signal. Again, nothing being hidden, no secrets. How does price behave on the day? But we have signal days. We have 3 days of breakout traders in the markets as we head into a new month, a new timing cycle, explosive opportunity that presented at the beginning of the month on silver. We have a market now that continues to break higher. No indication of a reversal. So traders who are catching highs and catching lows on the minutia is great for session opportunities, session nail and bail opportunities, but the higher time frame templates offer us scalable opportunities when we get our signal days on these higher time frame markets. Doesn't matter what instrument or what market it is, they all behave the same. Understanding that when a market gives a signal day, we can also have a market that gives us a trade setup. We have a new month, new timing cycle, market breaks out. Closing and breakout also gives a first red day signal, but the breakout may not fail. So it's failed on the day back to the low of the new month. We're looking at gold daily, but we get a first green day signal. Breakout pullback and a possible continuation now. Week 1, week 2 closes in breakout above the high of month established on week 1. Higher highs, higher lows. No breaks of daily levels. So just counter trending highs and lows is a recipe for blowing up your trading account unless you can understand, number 1, what setup are you hunting, but also understanding which time frame is driving these moves. Heading into non-farm payrolls Friday, we have higher highs, higher lows, and a market that is closed in breakout of the previous weekly high. We have our non-farm payrolls release, and we have our engulfment off closing price in the previous week's high of week level. We have a 1-bar stop. This is a 5-minute chart, and we have higher time frame levels from the previous month targeting as a take profit level. There is nothing hidden from you. It's having a game plan, being prepared, and understanding where and when you will execute your trade, how you will manage your risk, and where you will take profits from. Now, people are arguing about market, the real closing time is midnight, and cryptos and everything else, and that's great. Whatever works for you, keep it consistent. That's the most important thing, consistency. I use New York closing charts, 4:59 p.m., and that's all I care about. So we look at a market at the NASDAQ, for example, the NASDAQ 100 daily chart. Again, just simplicity, sitting on our hands, markets that break out, give us signal days, understanding when markets are having one-day counter trends for continuations, or when we get signal days for all-in opportunities. We started our new month. We had a market that closed in breakout, giving traders an opportunity, which turned into a first red day signal on Tuesday, engulfing a death candle, a large death candle inside of our first 2 trading days of the month, coiling sideways, giving us an inside day and 3 days of breakouts short, heading into non-farm payrolls Friday. How does price behave on the day? Non-farm payrolls breaks the low of day level. So we have nothing to do until after the news is released. Again, sitting on our hands and waiting. We had our first bounce opportunity at 9:30 New York Open for a parabolic explosive move taking out the low of month level. Remember, simple, repeatable, scalable. Peak formations are up. We're targeting the setup. First red day, we have an inside day coiling sideways. Like we mentioned about the Swiss franc, a market that has given us no indication of a reversal. How does price behave on the day? It gives us the explosive move on payrolls, breaking the low of day level, and a beautiful first bounce coil heading into the New York Open. First bounce, always need a higher time frame setup. Page 101 in the playbook. Same setups, any instrument, in any session. How does price behave on the day? We're targeting higher time frame templates. There is nothing being hidden from you. There are no secrets. I'm not keeping anything from you. It all pays in hindsight because these signals identify scalable, repeatable opportunities that can significantly compound your trading account. Doesn't matter if it's metals, energies, indexes, currencies, or crypto. Higher time frame signals to help us identify scalable setups in the session that are trading. So 1 or 2 of these a week, scalable in size, are enough to significantly compound your trading account. When a market breaks out, just trying to catch the high or catch the low, if you don't understand the higher time frame, you can blow your trading account out. Traders trying to counter trend oil in a market that has broken out on the higher time frame, a short squeeze template built up over weeks. A beautiful parabolic explosive move heading in towards the end of the year that has continued to trade higher. Short-term reversals, but no indication on the higher time frame yet of a market that is ready to reverse. So I'll repeat to focus on simplicity and not doing anything to self-sabotage your good results. Building your belief, your muscle memory by studying simple, repeatable, scalable setups. There is nothing being hidden from you. Basic, simple methods that are scalable in size. These setups repeat over and over and over again on any instrument. The simpler you make it, the more profitable you make it, the more pleasurable you make it, and rinse and repeat. Scale it up in size. Keep it simple, traders, and when I say keep it simple, I mean keep it simple. There is nothing new under the sun. There is no secret algorithm running the machine. Keep it simple. These setups show up on any instrument, any market, in any session. How does price behave on the day? Mindset, beliefs, and behavior of the trader are the most important thing to your long-term consistency. Have a great weekend, and may the markets go with you.